Okay, day 8. Today is what I'm calling 5 steps to becoming a strategic commercial real estate investor. I thought what I would do is maybe just kind of start off with how I came up with this idea, and really, it it was on a run recently where I was listening to an interview with a gentleman that was trying to essentially land John Bon Jovi as a client, and this run was a little while ago, so I don't remember all the details, but I do remember. Let's call the guy Chris. Chris going in and trying to set an appointment to get Bon Jovi on the phone. And basically, what he did is he called in on a Saturday morning when he knew he was going to be at the studio. And my understanding is that whoever answered the phone just put him on hold, and he was able to kind of hear in the background someone practicing their scales. And when John Bon Jovi finally came to the phone, Chris said, "Hey, who are you working with? You know that the voice sounded great." And Bon Jovi said, "Oh, that was me. Thanks, I appreciate that." And after Chris got off the phone, he realized that here is a guy that's worth over 400 million, still in on a Saturday morning practicing his scales, and it's just really I think a good reminder that even though some of the stuff that I'm going to talk about today, if you've invested in real estate in the past or you're new to commercial real estate, I'm going to start with the fundamentals, but these fundamentals are necessary for every single deal. So just because you learn about supply and demand, which is kind of two critical factors that we'll talk about, um, doesn't mean that once you understand it that you can kind of forget about it. And it's even important for me because I can tell you that it's very easy to ignore some of these fundamentals because they're not sexy. They're not, people want to get into the nitty gritty. So, first, what I thought I would do is just give you the big picture of what week 2 is going to look like, and then we'll drive into today. And so this week, I'm going to cover off core concepts on investing in commercial real estate, what a programmatic investor is. I learned this concept from a very successful broker out in Toronto, Derek Lobo. Number 3, how to find great commercial real estate deals, how to value a commercial property using what I call the BOE, and then the eightfold path to investing in commercial real estate. That'll be pretty fun on Friday. So today, the fundamental that I want to really hammer home is supply and demand. And I'll tell you a story of a client that I'm working with in Toronto and how, I guess, important this is. But just to give you some concepts on what you're looking for when you're looking for, say, demand factors. And you can see behind me, probably the most important. I wonder if I have a felt here somewhere. Yeah. So the number one is jobs. I mean, that is essentially if you think about someone that's going to be able to pay rent, they need a job, whether it's rent as a business or rent as an individual. And so without jobs, for the most part, it's not a market that I would focus on. Depending on the type of properties you're looking for, if it's multifamily, you want to be close to schools. Hospitals are important, amenities, transportation. What I've got here is following the smart money. So if you are unaware or unsure as to kind of where you should be looking, kind of a, I don't want to, I hate using the word hack, but I guess modeling what smarter, bigger developers are doing is generally kind of a more streamlined way to figure out whether or not the area or the city that you're in is a good place to invest. So right now, Toronto, Austin, Dallas, Houston, Vancouver, you can see smart money, big money, putting a lot of energy and effort into these cities. These are ones that I'm studying. And that's because there's a lot of job growth, and there's other obviously demand factors that are driving that. Now, on the flip side, what I would be looking at is how much new supply is coming on. So if I use the word the city Dallas, for example. I don't know the exact number. I forget because I'm not actually investing in Dallas, but I'm watching it. But I want to say there was like 26 to 28,000 new starts in multifamily last year. So it's because it's a pro development city. If you were in, say, Vancouver, where there's a lot of new people coming there, it's very difficult to get development permits. And so supply is constrained, which is why you're seeing just a real upward pressure on rents and valuations. So really the, these concepts are important, but it's really the data behind it that's going to give you comfort and certainty as to whether or not you want to invest. So, for example, if you were to really drill down and say, okay, so that's great, supply and demand. How do I actually start? Where do I start, Shane? And what I would say is this. Number one, you're going to start with the city that you are living in and research that first. The reason, just at a very high level, the reason I suggest new investors starting in the city they live in is because number one, you're going to have more relationships there. And because this is a relationship business, my suggestion would be start where you've got a bit of a competitive advantage. Okay, so that's number one. Second, once you're in this city, what are you looking for? The things that you're looking for, now they are in the article that I've written, which is, I think it's almost 1,800 words today, but you're really looking for jobs, GDP, population. A big one these days is immigration. I'd be looking for the demographics, right? Because generally speaking, younger families spend more money. Okay. So you're looking for demographics. And on the supply side, you're looking at new building permits, zoning, right? So let's say, I'll give you a good example, and I'm not going to give specifics because I don't want to create too much competition for myself. But where I'm looking right now in Calgary, I'm essentially assembling residential houses upzoning. So I have to spend some money. I've got a pretty good feel because I've talked to planners, engineers, council, and I'm reading online what the city is doing, right? The city is basically saying, hey, we are increasing density in these areas because we want to utilize the transit that's already there. So I'm not recreating the wheel, but I'm doing a lot of research. So you can see the research is what's going to separate me from the competition, because most people are not going to take the time to go on the city's website. They're not going to be reading about the new jobs. Where in the city are people living? Okay. So that's number one, is choosing the city. Number two is the research. Number three is the trend lines. So what I'm now looking for is, okay, so jobs have been increasing, but at what rate? Are they increasing at a steeper incline, or are they kind of falling off? So I'm going to compare it. So let's say Calgary, for example. I'm going to compare Calgary year over year for 5 years. I'm going to compare Calgary to Edmonton. I'm going to compare Calgary to Canada, right? I'm going to compare Calgary to some of the major cities in the US. I just want to understand, what do these numbers mean? Because that is, just having data isn't enough. I need to interpret it. So the third is, what are the trend lines? And number four, I'm going to start to track it. I'm going to basically open up an Excel spreadsheet, and I'm going to just start tracking it. You could track these numbers. I would say probably to start on an annual basis, but you could certainly do it on a monthly basis. If you're doing retail or industrial, you're going to be looking at vacancy rates. You're going to be looking at rents. You're going to be looking at price per square foot. So all of these variables and research are going to give you confidence as to whether or not this is a city you want to invest in. And basically that's number five, is really deciding. So once you've got that information, you make a decision. Now, I was going to go into a case study. If this goes over, then just go watch the rest of the video on YouTube, because I know I've only got 10 minutes on LinkedIn. So I've got a gentleman out in Toronto right now, and that the GTA market is hot. I know, very low cap rates, and prices are high. But what I had to remind my client was, and I'm not, I have no vested interest in him whether he buys up this property or not. But what we talked about was, where do you believe rents are going? Are you buying below market value? Is there growth? Yes, yes, yes. You're close to transit. There's a very strong, what's the word I'm trying to say? Over the next 5 to 10 years, do you believe the value is going to be higher or less? And do you believe that you're going to be able to collect rents that justify the rents or justify the investment today? And so after we had this conversation, it was determined that based on everything that we've found, it made sense for him to make an offer. Now, his offer is going to be based on his return thresholds and what he believes to be true. But I can tell you that I said, look, if this was in my neighborhood in Calgary and I had the same fundamentals, right? Because where he's investing is very different than where I'm investing, right? In Calgary right now, I would say the market's fairly flat, right? You don't really know what's going to happen. I mean, there is some job growth, but unemployment is high. But in the GTA area, there is just so much demand. And yes, there is new supply coming on, but the costs are high. And so I think if you're in a great location, which he is, and in a solid property, I mean, I looked at this and I said, look, you got to be comfortable with the underlying real estate. I mean, don't buy this just because of a brochure or the numbers. You really want to be comfortable and excited about it. And this is an asset that I can tell he's pretty keen on. So to end off, the homework today is really just do those 5 steps to becoming a strategic investor. Just as a recap, choose the city, start your research, look for the trend lines. It's hard to do this with your fingers. I can't anyways. So choose the city, research, trend lines, track it, and then decide as to whether or not if the city is one that you want to invest in. If it is, then what I would suggest is continue doing the research. This really doesn't end. If the city you're investing in or you live in, you don't feel comfortable, then what I would say is start to go out a little bit, look at other cities, cities that you've either got relationships in, meaning you know people, you travel there, you're close to it. That would be kind of my second thought. But I can tell you, for the most part, the investors that I'm dealing with across Canada right now, even if they're in a small city, they're still, or a small town like under 8,000 people, they're still finding opportunities. So I think that's really what I wanted to cover off today. Comment below what was your biggest takeaway, and tomorrow we will get into the programmatic investor. This is probably one of my kind of most favorite topics, and I'm looking forward to it. Bye for now.